Good morning, everyone. My name is John Muhlen, and I work at Feely & Driscoll PC, a regional accounting firm in Boston. Feely & Driscoll provides audit, tax, and financial consulting services throughout New England for numerous industries. On today's webcast, we will be discussing a business owner's decision to expense versus capitalize a transaction. Following this presentation, feel free to call us at 888-875-9770 or visit our website at www.fdcpa.com for any further questions. At F&D, we understand that sometimes it is difficult for small businesses on whether to deduct an expense in full or capitalize and depreciate it. The one simple rule that you should always remember regarding capitalization is if you are going to benefit from the asset for more than 1 year, then you should capitalize it. Capitalizing an asset allows you to spread the cost over an extended period of time. The amount capitalized is then depreciated over the useful life of the asset. There are some standard useful lives for certain types of assets. Easiest way to find out the standard useful life for an asset is to email our firm for assistance. That being said, I've figured I would give you an example of depreciating an asset. Suppose you own a business that just purchased a truck for business purposes for $40,000. You would place $40,000 on your balance sheet as an asset. As the benefit of the truck will last greater than 1 year, you can capitalize it, like we talked about above. Generally, the standard depreciable life for the truck would be 4 years. Therefore, for every month over the next 48 months, you would debit depreciation expense, an income statement account for 1/48 of the asset value, and credit accumulated depreciation. Therefore, for every month over the next 48 months, you would debit depreciation expense, an income statement account for 1/48 of the asset value, and credit accumulated depreciation, a contra asset account for every month until the accumulated depreciation account equaled the purchased asset. Now that I've gone through that example, here are some of the answers to some common questions I get regarding capitalization for new or pre-existing businesses. In terms of accounting standard updates, the one thing that would most likely affect your business is ASU 2015-05. The FASB issued the standard to simplify the capitalization versus expense decision relating to software. This has come into question a lot recently based on the growth of use of cloud-based computer software. Most of the confusion comes from the fact that organizations are not storing cloud-based software on their premises. The update states that if the cloud computing arrangement includes a software license, which would be listed within the agreement that you have, then the software license cost would be capitalized and be amortized over the length of the contract. If the business does not obtain a software license, the business should account for the arrangement as a service contract. This means that you would have to expense the contract in the period that it was entered into. The next thing that I always get a question on is how it relates to taxes in terms of startup costs for businesses. And small businesses can amortize startup costs when starting a business based on IRS rules, but not on GAAP rules. The costs that can be amortized are ones that were incurred before the day your active trade or business begins. The next thing I get a question a lot on is consulting costs and how they are used in terms of capitalization. Consulting costs to implement new software or hardware at an organization cannot be capitalized as part of the asset. The consulting costs are effectively considered training costs for the organization and do not have an economic benefit of greater than 1 year. Remember the rule that I mentioned earlier to help you out with this. And then finally, to give you a little industry-specific information, it is important for nonprofits to get an appraised value for any capitalized assets that you're acquiring from another nonprofit. This is important because you can have the assets on your book at the fair market value of the assets at the time of the acquisition. It is effectively an increase in basis for you overall. And finally, that really wraps up what I wanted to talk to you about today. I hope you enjoyed the knowledge that I passed along for your business and that it makes you curious about learning more about these complex business decisions. If you have any questions, feel free to call us at 888-875-9770. Visit us on our website at www.fdcpa.com and listen to more of our webcasts online. This is John Muhlen signing off. Have a great day, everyone.